Let's begin today's event, sponsored by Onfido and MoneyLion and hosted by American Banker. I'd like to introduce your moderator for today, and that is Mike Sisk. Mike, you have the floor.
Thank you very much, Marvin, and I would like to welcome the audience once again. We are very grateful that you have chosen to share some of your busy day with us. We know that your time is valuable, and we will honor that today with what I'm confident will be an engaging discussion today. And our topic, again, is Digital Trust Strategies for 2022, Thoughts from Onfido and MoneyLion. And my name is Mike Sisk. I will be your moderator today. I am contributing editor at American Banker, and my articles have also appeared in Barron's, Crane's New York Business, Inc., Institutional Investor, Strategy in Business, and Worth. And I am very, very pleased to introduce our two speakers today. Here they are. Gagan Sekhon is the Director of Analytics for MoneyLion. She builds on a rich career specializing in fraud, product, and data to lead the next generation fraud and payments platform for MoneyLion. Before joining MoneyLion, she worked as a fraud product manager at Western Union, ThreatMetrix, Neustar, and FeedsEye. And prior to that, she worked as a fraud data scientist at Zoom. And we are just delighted to have Gagan with us today. And joining her is Katia Mar. Katia is the Vice President, Product Marketing at Onfido. She drives global go-to-market strategy and helps accelerate growth through scalable marketing programs and thought leadership initiatives. Katia is a lifelong technologist and a transformative leader who has been overseeing product marketing efforts in AI companies disrupting finance, cybersecurity, real estate, life sciences, e-commerce, and media markets. And so really looking forward to the discussion today with both our speakers. And just wanted to reiterate one quick thing that Marvin mentioned at the top. We are going to take questions sort of actually during the program today. So if you type your question in the console, one of ours, either Gagan or Katia, will get to you during the time. We're not going to have an actual time at the end. So we're gonna answer questions sort of throughout. So if you've got something on your mind, don't save it for the end. Put it into the queue while we're live with you all today. So just that little tip. And so we're gonna have, as I said, we're gonna have a discussion with both folks today. And I would like to kick things off with my first question, and I think this one will go to Katia first. How has trust between financial services and users changed in the past 2 years?
Thank you, Mike. Thank you so much for the question and for hosting us here today. We're very excited to have this conversation with Gagan. To answer your question, it's quite fascinating to me to think how much more customer-centric the world has become in the last couple of years, especially. Consumers have now more choices than ever. The pandemic has moved the digital services into a much more competitive place. Customers in general are not interested in brick and mortar experience, and there is a wide choice of financial services online. Things are no longer limited to what consumers can access by driving to a place or walking to a place in their own town. As a consumer, I can now sign up for a bank account with my phone from any location, and if I'm not satisfied somehow with the service right away, I'll go to a competitor and I won't hesitate. Consumer trust is much more about the experience. It used to be perhaps about the longevity of the financial institution or even the grandness of its branch, but it's no longer the case. And on the flip side, from the point of view of the financial institution, it's getting more complicated with trust. Financial institutions transitioning into the more all digital procedures, and that includes both onboarding, the account creation point, and further interactions with the consumers. And we have seen banking and financial institutions in the last couple of years get hit particularly hard by fraudsters during the pandemic. There was a big increase in fraud throughout COVID. We have seen 42% increase of identity theft in US alone in 2020. And I believe it reached 712 billion in losses. And as part of that is perhaps due to the explosion of ransomware attacks that flooded the dark web with all kinds of stolen customer data and personally identifiable information, PII as we call them. So lots of changes that happened recently, and we really expect those changes to stay with us after the pandemic as well.
Gagan, please, I'd love to hear your thoughts on this.
Absolutely. So no, thank you, Katia. I actually totally agree with what Katia said. Given COVID, we are a lot more reliant on online services. When we have any kind of food delivery, it's contactless. I have to check my phone. I don't have to wait for the door knock anymore, let alone leaving my house to go to a grocery store or to a bank. As a result, apps are being used a lot more. As Katia mentioned, if they're not satisfied with what you have to offer, the consumers will go to your competitor in a minute. However, it's not as easy to move from one competitor to another if the trust is lost, and depending on what trust is lost when it comes to banking, because it's not we hold your services, we're holding your money. So as a result, trust is a lot more important, and moving is an option, but as users are doing it, they have to be a lot more cognizant. They don't want to lose any of the funds that they have. So account creation fraud that we just talked about a minute ago, that Katia mentioned, identity theft, was due to ransomware and other things, but it was also due to stimulus check and unemployment fraud that opened up so much money to be taken that the fraudsters were going after it. Whether they had the identity data or not, they were going to figure it out. However, all of these leaks to the dark web helped a lot with these identity thefts. And that makes it very hard for fintechs to make sure that the account that's being created is being created for the user that is there. As a result, we've had to build technology. So the issue there is it's not our consumers' trust that we're losing at that point. It's the public's trust that we're losing, because the user whose PII data is being used on our platform at that point, or on any platform at that point, is not the person there. They're not even your customer. How do you actually safeguard the public against these fraudsters? Now, when we look at our customers, there's different trust issues there. We need to make sure that their data is secure. We're not part of the dark web leaks of any kind. Even if their data is leaked, for example, their credentials are leaked, how do we prevent malicious users from accessing their data and their funds on our app? So ATOs become a huge issue at that point. Account creation is an issue not for the actual customers of your platform, but the rest of the public. However, having said that, if you can't protect the rest of the public from what accounts are being created on your platform, how can you justify to your customers their data is protected? So in this contactless world where you can't see a person face to face, how do you make sure they are who they say are? ID scans and selfies have come a long way in this time period, but there's other factors. I'll tell you a short story that recently happened. My mom shops at this retail consumer a lot. She's been doing it for over 10 years. It's not even a joke that how much trust she should have with them. She couldn't go in and she needed to return some boxes. So I went in, gave them the receipt, said, here's all the stuff she bought online. Can you please refund it? They were quite nice to refund it. Usually they give me an option between an email or a printed receipt. I always get a printed receipt because I know my mom is old fashioned. She'd like evidence that it actually happened and I just didn't drop it at the door and came back. So, this time I didn't think twice about it because the retailer didn't offer me that option. They just basically said, you're going to get emailed. So I went home, perfectly acceptable. We went around shopping. I told her, you're going to get an email about it. It's a Sunday. She knows very well, having a daughter in payments, that she's not going to get the refund today. Your credit card's not going to get refunded. It's not a business day. But she didn't get the email. In the last shopping, the grocery shopping, as I get to my car, she's actually on the phone with the retailer saying, why have I not gotten my email? They lost her trust at that point that, hey, where's the evidence that this transaction actually happened? So her concern wasn't that some malicious user did some error or fraud. So the trust actually goes beyond fraud prevention as well. It's, are the systems working as they're supposed to? Can they handle the volume as well? So eventually, yes, long story short, she did get her refund the next day, as I had promised. The email was a bit delayed, and I just felt bad for the customer service agent who had to rebuild the trust that this consumer had with them for 10 years, simply because an email wasn't sent out. So it's not just about protection against fraud. That's a trust issue. It's how do we reassure the consumer that what is supposed to happen is actually happening. So anytime you log in on a platform from a different device, you should be notified. Anytime you do something out of the ordinary, anytime you change your phone or an email, even if you called our customer service to change your email, you should be notified, hey, we know you did this. Can you please confirm you did this? Even though we're 99% sure that this was you. So that kind of reassurance, which is beyond fraud prevention, it's in my opinion, it's added friction sometimes. You're asking the consumer to sometimes do an additional verification. So that level of trust is coming forefront. It's no longer considered friction anymore. It's called building trust now.
Excellent. Excellent. It's always really helpful to hear like real stories like that to bring these issues to light. So thank you. All right, cool. Let's next question. So zooming in on the fraud prevention element specifically, what have your experiences been, and what are the latest fraud trends that you see in the market? And Gagan, let's give you first crack at this question.
So as I just was mentioning, it wasn't just the ransomware and the identity leaks on the dark web that contributed to it. It was the massive COVID relief and stimulus checks, because it was a lot easier to get the unemployment fraud money out from the states. The states' fraud prevention systems are not up to par as they should be. The verification that is done there could be a step up, but until it is actually up to the banks to make sure we're making sure where the funds are coming are correct. It's not just about AML, it's also about fraud. They might not be stealing money from us, the banks themselves, but they're stealing from somewhere else. They're still malicious users. If you let them in, they're going to do other bad things as well. You shouldn't be letting them in to begin with. That's definitely a question that should be answered. However, if they are able to let in, you need to actually verify them even further. So additional verification beyond onboarding is required, but the first safeguard is onboarding. How do you make sure this person is who they say they are? It needs to be beyond CIP.
Excellent. Thank you, Gagan. Katia, can we hear from you on this one? Yeah,
absolutely. Yeah. Preventing fraud before it happens is an ideal state, of course, but we can't always do that because users don't always act malicious to begin with. But at Onfido, we see all kinds of different fraud come in, and some sort of new forms, even in the last couple of years. And we just also see that the fraud is just getting more sophisticated. So generally, what happens on average, cyber criminals, they would go on the dark web, purchase identity, like images and profiles, and then they use them to get access to real identities and financial assets of the people. And they also constantly optimize and refine their fake credentials and profiles. And they tend to attack multiple institutions multiple times. So you see a lot of repeat fraud as well. Repeat as in you see it in one institution, a smaller one perhaps at first, and then a bigger one next week. In a document fraud, we see 44% increase in attempts. And one of the reasons is perhaps just creating the fake documents have gotten much more easier. All you need to do now, you go on the web, you buy $18 Photoshop template, and you recreate a real-looking U.S. driver's license. Super simple. We see the interesting one, the deep fakes, a ton of deep fakes in production today. These are these AI-generated videos that use one person's face on another person's body. You might have seen how sophisticated they have been. They have mocked presidents and actors and celebrities like that. How they do it, it's a more sophisticated algorithms, obviously, to do that, but there are all these kind of cool websites now where you can try to put your face on somebody else's body. Go play with it, it's fun. Another type is voice cloning. There was a case recently where the cyber criminals used AI to clone some company director's voice, and they stole 35 million from his account. How they do it, they call you from a number, unknown number, you answer. They record just 2 seconds of your voice, and that's enough to clone your voice. Voice biometrics is quite easier to clone than, say, facial biometrics, and it's easier to recreate as well. So I guess for us as consumers, the lesson here is do not answer unknown numbers. And at the same time, we're seeing a bunch of amateur fraudsters pushed online too. And you can understand that. Partially, this is due to the economic hardship that the pandemic has caused. And perhaps it's also a little bit easier now to use business weaknesses at this time. Staff are often stretched, not working on the weekends. So fraud is likely to go unnoticed. And we have seen the uptick of fraud on the weekends as well. And finally, like Gagan was saying, the unemployment fraud has been a massive hit, as many of you know as well. I think end of June 2020, the Washington Employment Security Division lost $600 million to fraud, which is the largest number lost to fraud at once by a state to date. So hopefully that's the last one, but you never know. So we're watching out for that as well.
Wow. Thank you. I now even have another reason not to answer unknown numbers on my cell phone. All right, good. Let me ask this next question. And Katia, I think I'll go back to you straight away with this one. So how do you prevent fraud in the ID verification market and stay ahead of the fraudsters?
Staying ahead of the fraudsters has always been an arms race in any industry or sub-industry, and it's a very challenging one. We use a few approaches, and a few approaches can be useful. Stacking the approaches can be useful. The first one I would say is the document fraud. So for document fraud, we have to stay on top of thousands of different documents in circulation. Onfido is a global company. We have companies around the globe that are our customers and partners, and they also have their own customers, even if they're a US company, from all over the globe. Each country has a set of basic documents, foundational documents, passports, ID cards. But then on top of that, there are different variations of each document in circulation because countries tend to refresh new security features every few years. So now we have tens of thousands of documents circulating at the same time. So how do you tackle that? At Onfido, we have the entire document specialist team that analyze the documents, and they try to stay on top of all the strengths and weaknesses of each of them. And every time there is a new event, new development, new action point, we retrain both the team and our AI models to face the new challenges. So that's document. The second one is biometric. Biometrics must work together well with the document verification. So in biometrics, we would see whether a user is physically present during the account creation or a login. And you can do it through a selfie or a video challenge. Through that, we can detect pre-recorded videos, 2D and 3D masks. That was something that fraudsters are using, virtual fake webcams and things like that. And then so you take an assessment, you take a capture of their face, and you compare that individual to, if you think about it, a highly pixelated image on a document, so which is not an easy task. So that's onboarding. Post-onboarding, you can add face authentication for the logins. It's a long-term solution. It's very strong. So you would capture biometric from a person when they onboard, and then you verify this biometric when they authenticate, and you can do it all the way through the customer lifecycle. It can also work with transactions to prevent transaction fraud. When post-onboarding, there is a high-risk transaction that occurs, you as a company, you can still fall back on your identity verification solution and just make sure that the customer is who they say they are. So these are more active protections. There's also passive signals that you can and you should leverage. These are the behavioral signals that can help uncover, for example, the patterns of navigation and design sort of a digital customer profile for each person. And that way, you don't need to store the documents because for privacy reasons, it may not be desired. And we can remove all PII data that way and sort of disconnect the behavioral signals, anonymize the persona, and break that relationship with the initial identity check.
Fascinating. Thank you. Gagan, can I invite you in on this conversation?
Oh, absolutely. No, I am actually grateful. All the things that Katia just mentioned, they sound very sci-fi. They would have at least 10 years ago, of all the things that are happening with voice cloning and everything. And our solution at that point used to be like, how do we prevent that? And now, thanks to companies like Onfido, those things are reality. Now, my answer usually for most fraud prevention, when people come up with all of these grand schemes that fraudsters have, is like, what are you going to do? Shut down your business? That's the only way you can actually prevent all fraud. The goal here isn't not to prevent all fraud, is to make the fraud as expensive as possible, which was the case about 10 years ago with voice cloning and all the other things around it. But as that becomes less expensive, the fraud solutions also need to come into play as well. It would have been a lot harder to clone somebody's voice about 10 years ago and steal the $35 million, even though $35 million would have been worth that. But now it is a lot easier. So hence the detection of that and prevention of that has become very necessary. And implementing those solutions is extremely important. About 10 years ago, when I started out in fraud prevention, most of these solutions would get proposed by the business team, and I would laugh them out of the room at that point. It's like, what am I, living in a sci-fi company? Come on, let's get real about these things. Like, nobody's going to do any of these things. Now, that is no longer an option to even laugh off or discuss, because we know that happened all the time. Before Onfido, we used to request ID scan and selfie just to be able to verify. You won't believe the number of times you got a picture of a man with a mop on his head pretending to be a woman. They didn't think somebody would be looking at it. It was like, okay, come on, guys. Those ones are easy to detect by humans, but beyond that, when they're actually trying to use the templates that Katia mentioned, those are not detectable by human, unless that human's been reviewing all the pictures and they're able to say, oh, I've seen this picture 15 times. So that, how does this person have 15 IDs? And then you're relying on somebody's memory at that point. So this is where Onfido and other technologies come in, where they keep track. They go beyond the human manual review and keep track of the different pictures that have been compromised, images that have been compromised, and also look for deep fakes. Now, having said that, as Katia mentioned, other signals are important because requiring ID scan and selfie are high friction points. Can't tell you the number of times I've gotten a phone call from my CEO when I was the product manager at MoneyLion. Is like, hey, my picture didn't go through, or hey, my selfie didn't go through, or my MFA didn't work. And I'm like, okay, it's just you. Can we just, do a little bit more patiently? But the answer at the end of the day is like, you're trying to prevent fraud, but also not shut down the business at the same time. So hence, there are models that go into the background for fraud prevention that do take the signals you get from ID scans and selfies as a waterfall effect at the end of the day. So goal here is to prevent fraud, but not go bankrupt while preventing fraud. Don't spend $50 trying to prevent $5 in fraud. I read, there's several different books or other things I've read where it comes down to, the $5 somebody earns should feel the same way $5 somebody loses. But the $5 loss feels so much greater that folks will spend so much energy trying to prevent that $5. They'll end up spending $50. There's so many times I have to talk to my data science team and say, okay, what problem are you trying to solve? Okay, let's look at the ROI of this thing before. Oh, before you go into that, let's just look at the number of people you got involved in this little tiny fraud thing that's going on right now that might not be that big of a thing, and there might be an easier solution to it. Oh, you got the number of people? Now let's multiply them with the salaries. Is this even worth it? But the problem with that mindset is if you go into every single problem thinking that way, you might be letting in more fraud than necessary. Hence, solutions like anomaly detection upfront are extremely important to say, hey, an alert went off right here. Can we do a little pass on it and see if this is a problem that's going to become larger or not? So the solutions have to be extremely layered. The system cannot just be one or another. The fraudsters are getting sophisticated. If we knew all the fraud problems we're about to get, we would solve all of them. But hence, anomaly detection up front to see if there's something going on that's weird, looking at it later and seeing what solutions need to go into place. Is it some email verification that can be done? That'll be helpful. Is it phone verification? Or is it ID and selfie scan at that point that's necessary? Do we need to actually contact the actual consumer and verify? So there's quite a few layers to IDV over time that get put into place. Manual review is absolutely the last one. As I've said, you will get pictures with a mop on your head and you don't want to waste time with those. But at some point you do have to contact the customer because other systems have failed.
Right. Very interesting. Very interesting. Thank you. And this is, Gagan, this is kind of a follow-up question I've got for you. So do you think financial services is staying ahead of fraud, and how do you stay competitive in this changing landscape specifically?
So as I just mentioned, you have to make fraud prevention your competitive advantage. You can't go too relaxed in the fraud rules, otherwise you will both lose reputation and money. You can't be very strict on them, because otherwise you'll be getting a call from your CEO about your user experience. I know that because he does have my phone number, and I do get those calls once in a while. So it's a balancing act, but at the same time, it has to be a competitive advantage. You just have to be better than the next guy. Okay. Right. As long as your fraud prevention is taking user experience into account, taking your reputation into account, taking your losses into account, and balancing that out, it's going to be the way moving forward.
Excellent. Excellent. Thank you. All right. Katia, let me ask you this. How do you implement fraud prevention measures without damaging the customer experience, which Gagan was just talking about?
Yeah, it's a great follow-up question to what Gagan was speaking to. It's absolutely a challenging thing. You have fraud prevention on one hand, and you have a beautiful UI on the other. And at onboarding and after the onboarding as well, a strong UX is super important. One thing to think about and to remember that today the users, the financial institutions users, are no longer just comparing financial services experience to other financial services experience, right? They're comparing them to the experiences they get from the companies like Apple or Uber or Amazon. And they might expect more security, and they perhaps would be okay with some form of friction from financial services. But they still would expect it to be handled just as gracefully. So another interesting thing to think about is how you handle the wait time during the verification, because there's usually some delay, right? And depending on the complexity of the verification and the need for complexity of verification, that delay can be quite lengthy for a user to wait. Even a 5-second wait can feel like a long time when you're sitting in front of a screen. People hate waiting, particularly if they feel stuck. They want to feel like there's progress and a sense of control. I mean, a real world example. One airport found that people were complaining a lot about the amount of time they had to wait before collecting their baggage. So what they looked at is the baggage on average would take about 7 minutes to arrive, and the time, which airport could not change, right? And the time that the route from the plane to the luggage department took was about a minute. So that would leave 6 minutes of passive waiting time. That's too long. What you can do is, you think about it in this situation, change the route. So the airport did just that. They changed the route. They made the passengers walk longer to get their bags until it stopped. Silly, right? But it worked. And it probably works in the online world as well. Give your customers something to do so they're actively waiting. You can allow people to continue browsing. You can have them explore the app. You can give them some tips and points or video. So everything that you do needs to be thought through the prism of what is the experience of the user, and how satisfied is this user going to be with my app after just coming off of an Uber app. That's how we think about it.
Interesting. Gagan, I know you talked about the customer experience a little bit already. Is there anything you'd like to add on this question?
No, as Katia mentioned, layered approach is one thing. And then the second one is the user experience. You have to make sure, for example, when you're making a long API calls, how do you actually layer them in ahead of time or whenever you have the data available? Don't wait until the last minute. Don't wait for the confirmation. The reason people wait for confirmation is they want to optimize for cost at that point. A wasted call is going to cost you money, but here's the thing. Wasted user experience will also cost you money at that point. So having a layered approach and also making sure you have all the data available as quickly as possible to you to make the decisions necessary is actually the answer at the end of the day. If you need to make would this person be able to do this transfer or not? Don't wait until they've decided to make the transfer to gather the fraud prevention data. Get the fraud prevention data ahead of time, but wait for the decision to be at the end of it. So this way you do both things. You are able to prevent the fraud and also provide a better user experience. It's quite similar to what Katia mentioned with the airport thing is, yes, get the data and make them wait a bit longer if you need to, or try to, if it's possible, I don't think this is physically possible in the airport scenarios, get their luggage there faster. So which is what I'm trying to say in the fraud prevention area is like, we can get and collect that data ahead of time. It's physically possible for us to do that. So don't count pennies at that point. Try to get the data ahead of time and make the decision when it's necessary.
Interesting. Thank you. All right. Let's see. Next question here for Gagan. How can financial institutions and providers create strong customer profiles at onboarding and beyond?
So Mike, this is a very difficult question. The issue there is when you're onboarding, you have no data about this customer. The only data that is there is the data that the customer is providing. You have no history about them. You've never met them. You don't even know if they're real human beings at the end of the day. It could be a bot creating that. There have been so many data breaches that we just talked about that the PII data is compromised. This is where having other institutions or other vendors at that point come into strong play. I can't say that this user during onboarding always logs in from this device because I've never seen that device before in my life. So I can't do that. However, if I'm using a device ID vendor, is it possible for that device ID vendor to be able to tell me, oh, this is the device this user uses all the time? If I'm using an ID scan or selfie vendor, can I have them tell me, oh, this is the PII data that always goes with this ID scan, and we've never seen this PII data with anybody else? Or with email, what is the age of this email at this point? Was this email recently created? Is this a fake one? Is it a disposable domain? So information that you don't have, you wish you had, you need to actually gather it from the vendors, and hopefully, and most of these vendors do have historical data. They will tell you what the age of any given piece of data that's being provided to you. That is one of their strongest signals that they provide. So that's how you can build a strong profile without having historical data. You can gain historical data.
Very interesting. Katia?
Yeah, I absolutely agree.
Yeah.
It's about preventing and predicting the fraud before it happens. That's the best case scenario if you can do that. One thing is to have different components like document and biometrics. What you want is to have a trustworthy vendor who can absorb all possible fraud signals, process them, piece them together, and give insights to the future possible risk. One way to do that is tapping into like a fraud consortium. It's incredibly helpful. Mm-hmm. It allows companies to build connections and correlations to protect from fraud collectively. Because every time we see an attack on a smaller customer, like I mentioned before, say the cryptocurrency industry, you can be sure that this attack will be repeated with a bigger fish in the next week or two. That's just how they operate. And onboarding, I think biometrics can be quite effective. It can then be reused to authenticate later in the customer lifecycle, like we discussed before. And it can be used for high-risk scenarios, for example, the high-value transfer, change in account details, or when you look at the passive signals and they're not simply enough, like Gagan was referring to make a proper consideration. So one way to go is request a new facial biometric from a user later after the onboarding, compare them, match it against the face that we originally saw at onboarding, and that's something that can allow the transaction to happen.
Excellent, excellent. Thank you.
Now,
Katia, let me stay.
I was going to actually agree with Katia. You do have to refresh the ID scans and selfie over time. Like, my face has not changed in the past 20 years. I'm not kidding. I can actually go back and use the same pictures, but other people's faces change. People grow facial hair, and hence you do have to refresh them, the data that you might have available at that point.
Absolutely.
Yeah.
Cool. All right. And Katia, let me go to you with this next question. So the pandemic pushed most of the world into transacting more online. Can you talk about how this has changed customer attitudes and expectations?
It's a curious question, right? We actually did a research with Okta earlier this year. We surveyed 5,000 customers around the world in 5 different countries: US, UK, France, Germany, and Netherlands. And so there's some fascinating studies, and we have a report for download on our website if you guys want to check out the details for it. But some of the things we found, 9 out of 10 customers feel comfortable or very comfortable accessing services online. And what is remarkable is that it's consistent across all generations. 85% of 55 plus age group reported the same. In banking specifically, 77% said that they would be happy to never visit a branch at any point. That's what our research said. And they want these interactions to be fast. 2/3 of customers expect account opening to take less than 10 minutes. And I expect this number is going to only decrease as we move into the next years. So what it tells me is people are ready and willing to go digital, but with that desire, we asked them if businesses were living up to their expectations. And so 70% of customers reported that they have been blocked from accessing services online in the past year. So where do they go? What happens? Do they try again? Do they go to a competitor? Like, where is that loyalty? Like, how much loyalty do customers have these days? It's unclear. I would say that with, just my assumption here, but with millennials and Gen Z, the loyalty is probably not as you would expect from perhaps older generations. And again, it's a highly competitive world, and the digital leaders are winning the hearts and minds of consumers. So it's always a competitive environment. You need to be, like Gagan said, you need to be better than the next guy in that.
Mm-hmm. Mm-hmm. Interesting. And Gagan, let me loop you in here. What do you think of this? How would you respond to this question?
So as Katia mentioned, the experience from Uber, Amazon, and DoorDash have spoiled us so badly that we expect the same experience everywhere. The struggle that I have is the payment system has not changed. The ACH still takes as long as it does. I can't make the 4-day window that it takes ACH to process or give us our returns any shorter due to the pandemic. So that's where some of the fraud prevention comes in as a way to mitigate users' expectations. How do we actually process your transactions faster without actually processing them and give you the results? How do I make your credit card payment as done before I even remove the funds from your account? I have Chase and other banks that will mark my credit card payment as done before they've even gone into my bank and removed the funds. That's because they've built enough trust with me over time. Like, she will have funds in her account. Maybe they run, other API calls to check, does she have enough balance in there? But over time, I've had an account with them that I have built. It's not just about the trust that I have in Chase or in other banks. It's how much trust do they have in me to be good for that money as well. It's less of a fraud risk at that point. It's more of a credit risk because it's a credit card. Is how do we cover for all the ACH processing delays that you're supposed to have? How do we cover for the payment system that is ancient and old? And help the consumer have the same experience that they're getting used to from Ubers and from the Amazons of the world. I'm not kidding. The day I don't get my delivery from Amazon or somewhere, or if I go online and they say, oh, you can't have this in 2 days, I will move on to another item to purchase instead. Like, no, I like this thing tomorrow. Whether I need it tomorrow or not is actually irrelevant to the question at that point. It's no longer even 2 days. Can I get it tomorrow? Now, will the package sit in my living room for days before I open it? Absolutely. But I still want my delivery tomorrow.
Instant gratification, right?
Instant gratification, yes.
Oh, Gagan, let me stick with you for this next question. So what are some industry standards for ensuring safe and seamless digital access for consumers?
Mike, this one is a touchy topic for me, to be honest. The issue with industry standards are there are very few industry standards. And most of the industry standards there are, malicious users already know about them, and they've already found a way around it. Let's just talk about ATOs for a minute. If you have authentication, you can have 2FA. You have password and you have one-time PIN. What are your options for one-time PIN? You can use an SMS service. Guess what? Carriers are not that reliable. I know we live in a first world country and you're supposed to get your text messages when you're supposed to, but it's not 100% reliable. So what do I have to do? As a fraud prevention expert, I have to give them another way of doing it. What is my second way of doing? Email. People tend to use the same damn password everywhere. If your bank password has been compromised, the probability is your email password has also been compromised. So as a result, this industry standard that is there, which is supposed to be, was cutting edge when it came out. It was high friction. Everybody was annoyed with it. Now it's turned into a standard. You have to have it, but I feel strongly that it doesn't prevent that much fraud. It causes a lot more friction than necessary. So you need to, as a result, as a leader in the fraud industry, we have to find better ways that are beyond the industry standards. The industry standards need to innovate as opposed to what they are. We just talked about authentication, and now we're going to talk about onboarding. Now, when we talk about onboarding, the industry standards are CIP. Those are regulatory requirements. You need to gather PII data, name, address, SSN, date of birth. But when you're doing a match, you're only required to do 3 out of 4 as a match. What happens as a result is synthetic identities can be created. As Katia mentioned, the fraud starts with smaller fish to build the data pool that they need to build that profile. When you watch movies, they talk to you about synthetic identities, like, they got some infant's birth certificate who's no longer alive, and that's how they create an identity. That is not how synthetic identities are created. What they do is they apply for a loan. The smaller bank will actually try to verify the identity, fail it, but the fact that they tried to verify the identity created a record somewhere. It created a record with the credit risk bureaus. And that's the data that will get utilized next time. So the next time they applied for that same loan or for a similar bank, somebody will make that call and they're like, oh, a record in that name actually exists with all of this data. So industry standards, to me, do need to innovate with time. Most of the standards we have currently were cutting edge 10 years ago. However, we are living in the sci-fi movie that I was talking about earlier. Fraudsters have innovated. Industry standards need to innovate accordingly.
And it makes it so much trickier for institutions to know exactly what to do, right? Everybody's just sort of figuring things out blindly and then trying to borrow from, Googles and Ubers of this world, at least when it comes to user experience. And it's a very hard question for me to answer as well. I mean, I can address the seamless part of the question. And unfortunately, even at that, there is no standard or formula. Creating a great experience, user experience, is an art and a science. And if I had to pick one thing, it's about constant measurement and optimization. So those are critical. And taking the examples from our big tech brothers, the UI and UX geniuses, and maximally matching the ease of experience, given the industry implications and the joy of interaction, again, can help set you apart from competition, which is at the end of the day what you're trying to do.
Katia, but I would disagree with you on that one. Our brothers and sisters in the large banks, they do have good user experience, but when you look at their fraud prevention mechanisms, they're very, very strict. I had to once reset a password for my Gmail, and I couldn't even get customer support on it. I couldn't figure out how I was going to authenticate on it. And it turns out they were using my location data. And I didn't even know. And they made it so difficult for me to just simply reset my Google password. I had to go through the Android app store or something. And you can only imagine me on the phone when I can't reset my password and can't access my email, which is such a crucial part of your life. The person actually said, okay, if you just go home, you'll be able to reset your password. I'm like, oh, seriously? Okay, first of all, you should not have told me that. Okay. Second of all, you should not have that as a fraud prevention measure. So user experience is a great thing that Facebook and Google have done a great job on, but I feel like they're still lacking on some of the fraud prevention. They're quite strict on it.
Yeah, and the OTP itself as an industry standard, or if there is one, I mean, one-time passwords, they just simply don't work anymore. The databases are not updated. The phone number, my oldest bank account, so I came to the US in 2007. I opened an account at Bank of America because that's what you do when you come to America. And so I entered my address and my phone number as I had it 14, 15 years ago. And that's probably still the address that they have. Maybe the address is not, but the phone number is not the one I own anymore. And since this is the only, I'm not using that account that much. There is some money sitting there, but it's not something that I actively use for my purchases, daily purchases. If they send me an OTP, that will go to the old number and I would never receive that OTP. So it needs to be innovated. Absolutely.
And getting that phone number updated, oh no, I have some rewards with a similar, I'm not going to name the bank this time, but there's a bank with whom I have rewards that I can't access because the phone number, they have my phone number, like 5 different phone numbers for me. And they have different places. And I'm like, okay, guys, you know this other phone number is my phone number. You have my other bank account. Why can't you just update this OTP phone number to be this one that I'm telling you is my phone number? You verified me up through the roof every single way, like short of me standing in front of you. So I've just made peace with the fact that I will not be gaining those rewards, and I just need to let them go.
Probably different teams are responsible for different parts of the application and your account, and they don't talk to each other, right?
Nope, and different systems as well. And getting them to change my phone numbers, like I have 1 phone number. Why do you have 5? Like every time I update, why don't you update your entire system?
You're going to let those rewards go, huh?
No, I've been for 4 years. I'm still going to find a way to get them because I'm like, no, guys, I'm hoping they innovate at some point and allow me to change my phone number.
So this is great. We're getting really very close to the end of our time together, but I've got one more question, and let me ask Gagan here to sort of wrap things up for us with this question. So what does a successful trust strategy in 2022 look like?
So the issue with the trust strategy for 2022 is COVID. As we know, a new variant has come out. So conferences are getting canceled, travel is getting canceled. So we don't actually know what it will actually look like at the end of the day. I could have said, travel will be booming. There'll be a lot of stuff that's going on around scams that is around travels and no longer around unemployment. But COVID doesn't seem to be finding an end. So the trust will be around our digital strategy. How do we already know what our customers' expectations are. Now it's our turn to come to fulfill those expectations. How do we actually prevent the unemployment fraud on our platform? How do we actually secure our customers' data even more than that it is, while reducing all the friction? So it's not relying on the industry standards at the end of the day. How am I going to prevent ATOs without doing one-time PIN or MFA? Perhaps I use the selfie that Onfido has to offer during authentication. Similarly, on onboarding, how do we make sure that the customer is who they say they are? When they're doing transactions on your platform, how do we make sure that the payment, even before it's collected, we give them Uber-like experience and say, yes, we know you're good for that money? How do we actually come full on that? How do we actually fulfill that expectation? So that's what I believe the trust strategy needs to be. Is like, for the last 2 years, we've been training for this thing. For 2022, it's whining needs to stop, and we just need to go and get things done even more than they were before. So when finally COVID is over, I still don't ever have to leave my house if I don't want to.
We've gotten used to being at home.
Yep.
Well, thank you. Thank you so much. This has been a wonderful discussion, and I think I think it's a good note to wrap things up on here. So thank you, Gagan and Katia, both for a wonderful discussion here of 45, 50 minutes. And I want to thank the audience, of course, for being here as well. Really appreciate your presence. We would not want to do it without you, so thank you for being here. And we'll also be sending you a follow-up email the next day or two that will have a link to a recording of this event, so you'll be able to revisit the highlights at your leisure. And with that, I think I will officially wrap it up. Wish everyone a wonderful rest of the day, and I hope you'll join us again here very soon. Thanks so much.
Thank you.